Hello, 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 and welcome. Give me one moment while I set up and allow for other call. We can get going here. Happy Thanksgiving Eve, as many may say. I'm sure everyone is ready, getting ready for their turkey day. A lot of people are, in my camp. They sometimes tell me that they don't like cranberry sauce. I love cranberry sauce. I absolutely love cranberry sauce. But one thing that I would stress to everybody is don't eat so much that the itis is going to kick in. The itis is going to kick in, and you're just going to go into uh, glycemic shock, and you'll forget everything that's going to happen. And my family, we have a little strange thing going on whereby if you fall asleep, they're going to take a picture of you. And not only will they take a picture of you, but they're going to share it with the entire family. So you may have thought that you were going to catch a little cat nap, and 15 minutes later, you're going to be revived and thriving. That picture is going to circulate for the next 20 years. All right. So this one should be a pretty short one, but a couple of weeks ago, I was having a conversation with myself. When you go live and you have these, I would say podcasts, blogs, etc. What happens is you have a whole bunch of equipment. I have my microphone here. I have my roadcaster over here. And typically when I'm joined with my wife, Eunice. So before we jump on, we go through everything, make sure that all of the settings are there. However, in this one particular instance, she wasn't able to join. So I went live by myself. And over here, everything was set up, but my roadcaster had the mute button set. So I went live. I talked about so many different things, in particular, your NAICS code and how your NAICS code is critical for your business's success and whether or not if you're going to be able to be fundable or not. Lo and behold, I had to delete the entire recording. Why? Because all you heard or saw was this. Wow. All you heard and saw was my lips moving because I was on mute over here on the Rodecaster Pro. Ain't that funny? All right, so let's get started, kicked off, and talk about who we are. We are Value Investment Partners, better known to the world as VIP, right? Value Investment Partners basically has a couple of different services that we provide to our partners. In the multifamily space, we do syndications. Right. We also have a residential operating concern where we help people who are local to us buy and sell. Right. In addition to that, we have our coaching program, which assists others in planning their 9-to-5 exit. Right. Along our journey, we knew that we had a significant amount of savings inside of our traditional retirement plans. However, if you are earlier than 59 and a half, you can't touch any of that money. You can do something called a Roth conversion, right? However, that is a drawn out process too, because if you convert too much money in 1 year, you're going to owe a significant tax bill. And we were trying to avoid that just the same. So lo and behold, we were thinking, oh, we have built up our net worth to the point where we are ready to basically exit the 9 to 5. And then we realized that this was locked inside of our retirement accounts and not discretionary to us. But lo and behold, like most things in life, when you run into something, you have to take a pivot. So we pivoted and we started at that point investing in whole life insurance policies. Why did we like whole life insurance policies? We love whole life insurance policies because there is a cash value component, and the cash value component can be used while I'm not pushing up daisies. In other words, the cash value component can be used while I am alive. And that was a journey for us. The journey was primarily around finding the right insurance broker who knew how to design the policy. So we didn't go with the first agent we ran into. We interrogated many different agents, right? Had conversations here and there. Wehowever, we came to find that many traditional agents weren't familiar with the infinite banking concept and how it needs to be used, how it needs to be designed. It needs to be structured such that the PUAs and the cash value component is growing at an accelerated pace versus growing the death benefit. And you don't have to work with us, right, at VIP Insurers, right? But if you're going to be working with an agent of sorts, make sure that that agent is very familiar with the policy design, and tell them specifically, I'm not really looking for the death benefit. You have to tell them that you're looking for cash value acceleration. So I wanted to share, we've just created the website for VIP Insurers. And VIP Insurers is where we assist others to develop their policies the correct way. And by the correct way, what I mean is the PUAs should be purchasing additional insurance, which is growing the cash value, right? A lot of the services that we offer here at Value Investment Partners are services that, for better or for worse, are services that we firsthand experienced, right? At this juncture, we have invested in 26 different multifamily syndications. And I guess as the Johnsons, we are givers. We love to give. And what we did is, when we invested and we saw that, hey, it was a good alternative to what was being done in other spaces, because at that point in time, I still was in corporate, maxing out my 401k, maxing out my HSA, etc. I was like, what else do I do? So I started looking for alternatives. And the alternative was to invest in multifamily syndications, both through my self directed IRA as well as through discretionary income that I had. And I could say from 2016 all the way through 2020, it was a tear. There were so many properties that were generating 2x, 3x multiples. It was awesome. It was an awesome time. However, we had to learn a couple of lessons after 2020, right? And the fact that we went through a rate of inflation, and although on certain deals we were capped on the interest rate concern, on several deals we weren't capped, and the sponsor had to go out and purchase interest rate caps. We're actually involved in a deal right now where perfect deal, right? Except in February 2025, the interest rate cap that had been purchased, that interest rate cap expires in February. The asset is performing 95% occupancy, 95% collections. The thing about it is, to purchase an interest rate cap on that particular asset is going to require more than $1 million. So we just received the email the other day stating that it's not known, but there may be a capital call. Capital calls in multifamily syndications are things that you really, really don't want to be involved in. Right? Capital calls is a negative word when it comes to investing in multifamily syndications, or any syndication for that matter. But a lot of people told us it was survive until 2025. If you could survive until 2025, you'll be good. 2025 is right around the corner. But let's see how we do. But really quickly, what I'm going to do is I'm going to pause the music, and I'm going to have a brief discussion with you, and we can get out of here a little bit earlier than what we usually do, and talk about, well, what is the NIAC code? North American Industry Classification System, right? And if you are building your business, it's very critical that you select the best NAICS code for your business. Otherwise, your business can either be restricted, or your business could be subjected to additional underwriting, all because you used the wrong classification when you set up your business, right? So, quick step back. I'm Lee Johnson, co-founder and vice president with Value Investment Partners. We are a boutique private equity real estate firm located here in Potomac Falls, Virginia. We are also involved in consultancy and coaching. We can teach you what we've learned since 2014 about how to set up a proper real estate investment company, regardless of if you're doing wholesaling, fix and flip, or the burst strategy. Our journey started where we have done all of that, and we eventually promoted ourselves to multifamily syndications, and that's where we are today. For those of you who aren't in our database, you're going to want to go to Value Investment Partners and sign up for our club VIP. That way, you're going to be in a position to receive our newsletter on a monthly basis. We don't spam you, right? But also, we talk about many of the different services and what we're seeing inside of the market, right? Now, let's get back to today's topic. Today's topic is around the North American Industry Classification System. These are industry codes used to define establishments based on what they do most of the time. The codes sort businesses to gather, analyze, and then publish statistical data on the US economy, right? On the US economy. That's what's going to be critical there. So you can drill down into it, right? The first set of codes: agriculture, forestry, fishing, and hunting. Those are going to start off with an 11, right? Mining, 21, utilities, 22, construction, 23. There are 1.5 million entities in the United States that fall into construction. The next highest one that I see is retail trade, right? Finance and insurance, right? Now, the thing that is critical is that you should use the code where you spend most of the time inside of your business, right? Because the different NIAC codes have different classifications, right? You do not want to fall into one of the high risk codes, right? And there are a list of industries that are considered high risk, right? And those industries that are considered high risk are here, right? And I wanted to share that with you so that you have an understanding of high risk and cash intensive codes, right? Because here you are, small business owner, and you need access to a line of credit or working capital, and you go to apply for credit, right? However, you come to realize that you've been denied, even if you are willing to provide a personal guarantee. You are denied. What's worse is if you have a pretty good credit score, let's say 750 and above, and you're denied, you're not going to receive that letter in the mail similar to what happens on the personal side when you're applying for credit. Why? Because when it comes to corporate or business credit, it's a different animal than what you have on the personal side, right? So the first thing that you want to do is, if you're creating a new entity, you want to go through and find the codes that are most applicable to your business. And you want to select the one, right? You want to select the one that is not high risk or cash intensive, right? Because not only is that code going to affect your access to funding, but that code would also lead into how you're going to be judged from an insurance rating perspective at the same time. All because you mistakenly selected the incorrect code. You don't want to be damaging to your own business. So what I'm going to share with you now is the link that you can use to go and find out what is your code and what code should you use. Now, and if you're in business similar to me, where I'm doing multifamily, I'm doing education and consultancy, etc., right? I want to select education and consultancy because I don't have employees, right? They're not going to be outside on ladders, etc. Right? So that classification is going to be the one where I do spend a significant amount of my time, right? However, it's going to put me into a classification that's going to give me better funding options and also insurance purposes at the same time. I hope that makes sense to you. Let's close out today where we talk about restricted industries. I don't know if you know this, but if you are classified as a restricted industry, you are automatically declined. So those are going to be in industries such as ammunition and weapons, finance, bank holding companies, banks, foreign banks, etc. Gaming and gambling, automatic declined. Also, adult entertainment, automatic decline. So if you're in those industries, hopefully you spend a significant amount of time doing something different than just that, right? So that you can use that NAICS code just the same. Also, there are a couple of high risk industries just the same, right? Computer and software services, high risk industry, subject to stricter underwriting guidelines. Dry cleaners, general contractors, right? High risk. Limousine services, high risk. Real estate agents and brokers, not necessarily high risk. However, the hurdle to enter into that industry means that there is risk there. Restaurants and drinking establishment, travel agencies. All of these things are going to be critical to you. However, if you have been in business for a time, you can go and look at your tax return to determine which one it is that you're using, right? However, if you have, you can actually change it when you file your next tax return as well. All right, so I shared how you can go and look up the NAICS code that is there for your business. I also wanted to share a list of high risk and cash intensive industries. This is a PDF that you'll be able to download since we are streaming to both YouTube, LinkedIn, and Facebook. You can go to any one of those and grab what you need, right? But as always, you can always go to Scan Us if you are a business owner and you need access to funding, right? The platform that we are partnered with has access to over 1,000 different funding sources. What we're able to do is look at your business and determine the one that is most likely to give you the highest amount and the best terms, right? You have access to those funding sources immediately. However, we want you to be in a position where your fundability has the highest score possible. And if you don't notice, there are 125 data points that need to be filled out, not all at once, but need to be filled out correctly, right? Need to be filled out correctly so that you can achieve the highest paydex score, right? And be able to be funded. That's what we're looking for at the end of the day. So that's all, folks. We went about 25 minutes today, right? If there are any questions, you can just drop it into the chat and I'll be sure to answer whatever questions that you have. I'm going to give us that jazzy music back, right? And we should be able to sit around for just a little bit before we close out. At the end of the day, I want to say thank you to all of our partners. 2024 has been a rough year, but guess what? We're still alive, we're still thriving, we're still surviving. And what we hope for is that 2025 is going to be an even better year. So I don't see anything coming up in the chat at this point in time. So I'm going to bid you a farewell. Farewell to you, to your family, to your health, to your success. And I'm wishing you all the very best. We'll be talking to you again in December. Can you believe it's already December? 2024 is gone. So I'll talk to you then. Go stuff yourself, spend time with your family, have great conversations, show gratitude and love, and we'll see you on the other side. Again, my name is Lee Johnson. I'm co-founder and vice president with Value Investment Partners, wishing you and yours all the best. Until then, take care, be well, and have a great one. Bye for now.